Welcome to KPMG in Ukraine, and thanks for joining us today. Today is our annual M&A event, which we are arranging in Ukraine for the several last years. Unfortunately, this year we were not able to invite you to our office, but we are still happy that you are together with us and we are discussing our favorite topic. Today's event will be in two parts. I will present the results of the M&A Radar research that we are conducting on an annual basis, and will share with you our insights about the year ended and our outlook for the year coming. And after that, we will have a wonderful discussion with our guests about the M&A landscape in Ukraine and the prospects for the future year. Okay, let's start. So in my presentation, I will cover the global scene to set up the understanding of the developments in the world in the last year. Then we'll talk about the major Ukrainian headlines and look into the detail about the developments on the Ukrainian M&A market. And we'll finalize with the outlook for and our ideas about the prospects for the coming year. Okay, so let's start with the global scenery. When we were publishing the last year's M&A Radar, nobody could think about the events that were waiting for us in 2020 and the developments that would have such a crucial impact on the global economy and on the lives of each person. The major countries in the world had a recession in their economies, and despite the attempts of the international financial institutions spending billions of dollars to tackle the pandemic, the recession was not inevitable. Of course, the M&A activity reflected this recession in economic development, and the global deal value fell down 7% and deal volume decreased by 16% versus the previous year. However, the story of 2020 in M&A was the story of two parts. The first half was decreasing M&A activity significantly, but in the second half of the year, the upturn was seen in the M&A activity. Thus, in the second half, when the lockdowns began easing, the M&A activity reached 2.2 trillion in the 6 months, which was the highest level on record for the 6 consecutive months in the last 10 years. Even though the total trend in M&A activity in the world was negative, there was a region, namely Asia, which expanded. This is mainly attributable to the developments in China and their attempts to attract foreign investment and develop the economy in their attempts to tackle the economic risks from the US. On the other side, the region which saw the highest downturn, minus 33%, was Africa and Middle East, and the United States similarly ended the year with a 21% in decrease. Technology, media, and telecommunication was the sector which has driven the M&A in the world, with a total value of about $850 billion, and it was accountable for over 55% of the total deal market. Let's look at the region where Ukraine is geographically located. This is Central, Eastern, and Southeastern Europe. And the region in total was moving in the same direction as the world. The value in M&A deals decreased by 8%, and the volume decreased by 13%. Ukraine has demonstrated really significant drop down in the value of the deal versus other countries in the region. However, please mind that partially this is attributable to the low transparency ratio, which is typical for Ukraine versus other more mature markets. Let's look at the major developments on the Ukrainian M&A market. Similarly to the global trends, the M&A activity started taking up in the second half of the year, and the majority of the deals took place in the fourth quarter. 26 out of 69 deals happened in the fourth quarter of 2020. The deal structure in terms of the domestic investors versus the foreign investors remained relatively stable, with 50% of inbound investment in terms of value in 2019 and 44% in 2020. The major sectors that saw the deals in 2020 in Ukraine were agriculture, information technology, real estate and construction, and infrastructure and transport. Jointly, these four sectors accounted for 60% of the deal volume and almost 80% of deal value. The foreign investors who were still investing in Ukraine in 2020 focused their view on the agriculture, information technology, and infrastructure and transport. Jointly, the sectors in inbound investment accounted for 76% in terms of deal volume and about 80% in terms of deal value. Based on the developments in 2020, we in KPMG believe that there are certain good trends in M&A market in Ukraine, and outlook remains relatively positive for 2021. Let's look in some more detail on what happened in the Ukrainian deal activity in 2020. The total downturn in economy was the major reason for the downturn in M&A activity. The NBU assessed the drop in the GDP of Ukraine by 4.4%, while the prospects at the end of 2019 were increased by 3.5%. This was the lowest drop down since 2013-2014, and this has definitely found reflection in M&A activity in the region. The value of the deals on the Ukrainian market dropped down by 62%, and the average value dropped down by 44%. The number of significant deals decreased as well, and it dropped by 76% compared to the previous year. The major sectors that Ukrainian M&A activity saw in 2020 were real estate and construction, innovation and technology, and agriculture. Jointly, they were making 60% of the deal value and 50% of the deal volume. In infrastructure and construction, we could see the deals happening in real estate and in warehousing and logistics. And the total value of these deals was over 200 million, and there were totally nine deals in this sector. The major problems in the sector were related to the restrictions posed by the lockdown in the entertainment industry, in retail, and also in the other sectors of the real estate and construction, and of course the office spaces. Office space industry was in the downturn as well, as many of the companies reconsidered their long-term plans for the office space, and the vacancy rates in Ukraine increased from 9% to 12.5%, and the lease rates decreased by 20% in the course of 2020. As such, the total value of deal making in the real estate and construction sector was not at the level of 2019. It fell almost by 50%. The largest deal in the real estate sector saw Dragon Capital increase its portfolio of prime office space by more than 38,000 square meters through its March acquisition of Kyiv's 101 tower. And another interesting deal which happened in the real estate was the state property fund's privatization of the Hotel Dnipro by Smartland, who won the auction, and it also agreed to invest another plans to invest another 20 million into this hotel, and the plan is to turn it into the multifunctional esports arena. Let's talk about the innovation and technology. The sustainable growth of e-commerce in the recent years was only supported by the lockdown and the consumer response to the lockdown measures. And therefore, the deals in innovation and technology sector saw the upturn, and this was the only sector which saw the rise as compared to the 2019 numbers, despite the fact that the value of the deals decreased by 53%. The number of the deals was up 18%, and almost 70% of the deals in this sector were made by foreign private equity and venture capital funds located in North America and Europe. At the same time, domestic investors remained active in Ukrainian IT companies and startups. At the end of 2020, Data Group, Ukraine's leading communication solutions provider, closed a deal to acquire its well-known domestic competitor Vola for $68 million, with full backing of Horizon Capital's EEGF2 fund. The COVID-19 measures and consumer response have also driven a boost in online activity and gave a rise in the number of M&A transactions in the software, e-industries such as e-commerce, e-health, e-pay, and e-learning, and data-rich industries such as data warehousing and cybersecurity. Outside the largest deals in the sector, the interesting ones were the acquisition of Hoxton Ventures, investment of $10 million in Preply.com. Actually, the recent news we just heard were that they've risen another 35 million investment from the existing and new investors in the recent weeks. Another interesting investment characterized in the innovation technology sector was the investment of Chernovetsky Investment Group into Zakaz.ua. The investment was of about $6 million. And Zakaz.ua is the company that provides grocery delivery services to major Ukrainian supermarkets. And there was an interesting deal also in relation to platform Licky24, which raised $5 million from Horizon Capital and pre-existing investors. It is also worth mentioning that our M&A Radar covers only those deals which are above $5 million in value. But we see the high activity in the innovation and technology sector, and in particular, there were about 38 deals with the individual value below $5 million, however, collectively responsible for the about $100 million investment into Ukrainian market. We continue to see strong interest in domestic IT companies, as well as those with a solid developer base in Ukraine. The country has a well-deserved reputation as a center of excellence, which should allow Ukraine to capitalize on accelerating developments in e-commerce that look certain to provide more opportunities for players in the sector. In agricultural sector, we've seen 13 deals worth of $170 million. The the top deals in this sector were around the land banks acquisitions. However, beyond that, there were also deals in relation to other segments of the agricultural sector. The largest deals in the sector were Epicenter Car and Agata Fund acquisitions, which made investment into the land banks in Ukraine. Outside of that, Cargill acquired Neptune, a Black Sea deep-water grain terminal with capacity of up to 290,000 tons, although the amount was not disclosed for that deals. Agriculture remains a powerhouse of the Ukrainian economy, and significant investment into the sector over recent years by both domestic and international investors has seen new farming practices and technologies employed to drive efficiency gains and improve yields. Land reform is likely to drive further consolidation of land banks by domestic players in 2021, while international investors will continue to seek opportunities to deploy much needed capital across the Ukrainian agricultural value chain. Let's look at the deal structure on the Ukrainian M&A market in 2020 in terms of the origination of the investors. It was still dominated by the domestic investors, which accounted for 43 deals worth $513 million US dollars. The outbound trend in Ukrainian M&A activity continues not to be the dominant. In 2020, there was only one deal, which was made by Horizon Capital into the Moldovan winery Purcari wineries. However, the outlook for outbound M&A remains depressed, with most companies focusing on the local and domestic markets. Although we believe that the continued export growth and investment into infrastructure needed to get goods to the foreign markets and human capital to those markets may stimulate activity in the medium term for the outbound deals in Ukraine. Let's look at what happened with the inbound investment in Ukraine from the foreign investors. We could see the announcement of 25 transactions, which was below the 2009 figures, where we saw the 32 transactions. However, the combined total of deals was down by 69%. We need to remember that previous year it was 405 million, but it was by 2/3 related to Baxel's acquisition of Vodafone Ukraine. And this deal accounted for almost 2/3 of the deal value in the previous year. The transparency in the inbound deals continued the declining trend of the recent years, and it fell from 47% in 2019 to 44% in 2020. When we talk about the deal transparency, we mean the number of the deals with the announced deal value versus the number of deals with the undisclosed deal value. So in terms of the regions in the world where the inbound investment to Ukraine comes from, Europe and North America were the typical investors in Ukraine, and nearly 75% of inbound deal volume was in innovation and technology. There were 9 deals in this sector. 6 deals were made in agriculture, and transport and infrastructure saw 4 deals. Europe was the most active with almost 56% of volume, but with average ticket of only USD 10 million per deal. Investments from North America were mainly attributable to private equity and venture capital funds investing in Ukrainian IT startups. Foreign investment from Europe, in the meanwhile, was directed towards agriculture and the transport and infrastructure sector. In 2020, foreign investors purchased 4 terminals in Odessa, 5 elevators, and 118,000 hectares of land banks. Let's have a look at the major deals that took place in 2020 on the Ukrainian market. The largest one of $130 million was Dubai-based terminal operator DP World acquired a majority 51% stake in TAS container terminal in the port of Yuzhny. The $110 million deal was the Dragon's acquisition of 101 Tower in the office space in Kiev. The 2 deals in the top 5 are in the agricultural sector, and they were done by Epicenter Car, who invested into Khmelnytsk Agro, and Agartha Fund LP, who invested into Cascade Agro and increased their land banks. And $70 million deal happened in the retail sector, where Novus acquired Bila in Ukraine. The major trends in M&A activity were driven by the changes caused by COVID-19. Of course, the M&A landscape changed and the deal-making practices changed as well. And the major trends in the M&A over 2020 were that the deals typically took a longer time for negotiations. The buyers were asking for a longer time to make their decisions. We have also seen the trend where the investors moved from the typical for the market locked box approach to deal closing to the completion accounts, as the buyers wanted to have the opportunity to factor the impact of COVID on the target results. Also, we've seen the changes to the completion documents and to the SPA, and we believe that some of these trends will remain in 2021 and will become the new reality in deal making. So speaking about the outlook for 2021, as usual, we see some headwinds. Of course, the pandemic is not under control in total, and the general situation in the economy, and as a result, the situation in M&A will depend on how the government tackles the pandemic problem. There is also decreased trust of the foreign investors into the Ukrainian renewable sectors, as the USD 1 billion obligation to renewable energy producers hasn't been settled yet. The pace of structural reforms and anti-corruption reforms will have a determinant impact on the developments in economy and investment activity in particular. And the forecast for Ukrainian economic growth largely depends on the second standby agreement payment to Ukraine by IMF. On the other side, we see certain tailwinds, which we believe will make Ukrainian market to a certain extent interesting and attractive to the investors. In particular, the current trend in infrastructure and private-public partnership. The Ukrainian government has seen the successful concession of Kherson and Olvia seaports, and the trend continues, and we believe that the plans of government to attract the investment into the PPP projects in the area of air and roads and river transport give interest to the foreign investors and may attract investment into Ukraine. Also, we believe that the long-awaited land reform will give rise to more activity around the agricultural M&A deals. In information and technology, the sector which is on hype both in Ukraine and in the world, much will depend in Ukraine on the discussion around the special taxation regime for IT industry, and the balance will need to be found between the taxation rate and the comfortable environment for the developers and software engineers. Also, the recent signing of statements of intent and memorandum of intentions with the United Arab Emirates worth USD 3 billion will not go unnoticed by the investors both in Ukraine and internationally. And interest to innovation and technology sector from the investors in private equity and venture capital funds, we believe will continue in 2021. So these are shortly the results of our research, and our M&A Radar will be published shortly on our website. In the meanwhile, you can have a look at the interactive version of the research, which is published on KPMG website in Ukraine.